following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out the day like we usually do with our DAX, and we'll put this up here so we can take a look at it. As you can see, we completed the Gartley up there at the 61% retracement this morning. It was about, well, everybody else was sleeping here, and it looks like we have a potential here for an ABCD move down to near the 12,000 level. That's 487 points from where we're trading right now, but whether that happens in 1 day or 2 days or 3 days or never remains to be seen, but the pattern is certainly correct. Now, one of the things that we talked about yesterday was the gold and the silver about a potential breakout, and I said I would be following that, and so I am going to do that. First thing we're going to look at here is the gold market. And I am actually going to show you something that I actually did just to see if it would have worked. Hold on 1 second here. We'll get this up. This is a perfect Gartley pattern, folks, right at the key level we were looking at, which was 1238. And as you can see here, the smallest correction that we had yesterday was only about $4. So my assumption is if you were to buy it above 1238, you only had to risk below that last low, which was around 1236. So you only had a $2 risk if you were to buy gold at that time, because you're going to buy it on a breakout above the 61% retracement, assuming that you're going to get up to the 78% level, which is 1248. Now, I went ahead and I actually did that one, and it got up to 1242, and so after it got to the 1242, I put my stop back at break even at 1238, and then I'm going to see what happens. That way I'm in a risk-free trade. The reason why I did it was twofold, just to do the discipline of actually doing the trade, because I have an inherent bullish bias now in silver and gold based on that long-term silver chart, and it certainly looks like it has that possibility to do it. If we'll take a look at the silver, you're going to see pretty much the same thing. You'll be looking at a chart that went exactly to the 61% retracement at 16.20 per ounce. It backed off about 8 cents an ounce. It never got any lower than 16.12, and then of course it turned and broke out to the upside also. So we are having a breakout. Now the ABCD structure on this silver market is a little different than the gold market, because you'll notice that would take us up to the 1650 level, which is the 78% level. If we get above 1650, folks, these markets, these precious metal markets have a chance for legs. Now, someone emailed me early this morning about whether this was going to be related to the healthcare bill. If you can put that one on the plate and explain it to me, I would certainly like to hear it, because I don't see any relationship between gold and silver and the healthcare bill at all. I don't see that much all. So we'll see if that's going to happen, but I don't believe it'll be anything to to make any problem at all. The other one that's getting ready to break out, folks, that we talked about is that crude oil. We did back off a little more than $1 a barrel that we were expecting to see happen, and all we did now was we pulled down to that 45.80 level, and now we've reversed, and we're getting ready to take out those old highs at the 47 level, which we've already done now in heating oil and also in the gasoline futures. So keep an eye on this oil, because we could easily get up and make that target of around $49 a barrel without too much chance, too much of a problem. So we'll watch this one very, very closely. There's a lot of strength in the grain markets this morning, which is not surprising because we had that beautiful Gartley form yesterday in the wheat. Let's put this up so we can take a look at it. And it's starting to act pretty nicely. I think it's up about 15 cents in a pre-market. So we'll see if that's going to be a case. If we can get this above the 551 level, then it could have some pretty strong support. Right now, we're just having the first move off of this Gartley. Had you bought that, what you'd want to be doing now is I would be using about a 5-cent trailing stop in this one because we haven't had any corrections overnight of any significance, or even yesterday we had very little. So I would just use a 5-cent trading stop because we're still in a weather market for sure. By the way, tomorrow I'm going to try to have Cy Only from Sylvia's Financial on. We're going to try to tie him down in his chair for about 20 minutes tomorrow at the 9:30 time frame. So try not to miss that because he certainly understands the grain markets better than anyone that I've known in this business, and that includes Rich Anderson. Of course, he trained under Rich, so it's like little clones, mini me or something. But he really knows it, and he's got a huge business that we can maybe ask him some questions on some of these weather markets. What he pays for auxiliary services like weather and supply demand things and like that, you would not believe. It's almost like the national debt. However, let's move on to the next one, and that is something that I mentioned yesterday that I feel very, very strongly about, and that is this long-term chart that we have in the VIX. This is the reverse VIX, which is the XIV. This is the upside-down version of it. And as you can see on this long-term chart, folks, this really means something technically. This is such a perfect chart that you really shouldn't dismiss it because it's got 3 drives to a top. Your A, B, C, D in price and time is absolutely perfectly. The ratios are there. I mean, my goodness, this is just about everything you could ask for. Plus, we're over this really strong cyclical time that we've been talking about through the eyes of Bill Meridian and Norm Winsky and also Shane Smolian. And by the way, we're also going to try to have Arch Crawford on as our guest later this week. Maybe on Friday, I'll have Arch on as our guest because he's always fun to listen to. Anyway, we will be watching this VIX thing right here. As a matter of fact, with the market being up yesterday, the VIX actually was up. So it went into new low ground for one day and then quickly snapped back, to turn positive, which is a side of the good. Yes, if I had to do a trade of the year, the second half, Mike, I would certainly do that. I don't like to do those trades of the year because there's too many questions that people ask me that I'm either unable or incapable of answering. And so it has everything that you could ask for in the trade of the year. I mean, it's got every pattern that you could ask for. All the time sequences are there. You do have some cycle stuff that, sort of helps verify it. But this is the one that these 3 drive patterns, when you see these as perfect as this one is over a long period of time, folks, this is over years because it's a monthly chart. That's why it would be a pretty good one. And not only that, but the VIX is acting like it wants to go up. So we'll see. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we were going to chat here a little bit about this gold trade. Someone's asking another question about why I'm using such a tight stop on the gold. Very simply, I don't do breakout trades very well. That's the understatement of the year. So I try to protect myself the best I can. And with the risk-free trade, that feels to me the best way to do it. If it keeps running, great. If it doesn't, no harm done. So mainly I was doing it just to walk through the process for you folks to see, how things are going on. Folks, we have another trade that is really interesting coming up here possibly this morning, and that is here in the Treasury bond market. We've been talking about this level of 153.24 in the Treasury bonds for about a week now. If we put this up here and take a look at it, you'll notice that you're going to be seeing a situation where you have the ABCD pattern completing up here at this 153.24 level. That is a 38% retracement coming down from the high that we made back at 157. This is a daily chart, so we've been rallying for about 7 or 8 days. That's about the maximum you're going to get in a bull market that has turned bearish, and that's what we think is happening here. Any move below the 151 level, as you can see here on the bonds, would set up the 148 level. Now, whether that has any effect on the stock market or not really doesn't mean very much, because of the fact that these things, when they move, they can move very, very dramatically and opposite to one another. We've seen this happen, more times than not, and that's a real thing to to really keep an eye on. For perfect example of that, folks, if you'll bear with me here 1 second, I want to show you the Japanese yen chart versus the U.S. dollar, and I think you're right there, Steve. I don't think there's any question about that. If you'll notice here with this Japanese yen, when we hit that 114.90 level, that was a ABCD structure at the 618. That's a Gartley. And look how the market has came off. But what's interesting is you'll notice the correlation between the Japanese yen and the US dollar here. This has one of the highest correlations of any of the cross rates. And look what's happened since June, folks. There's been a huge divergence between the US dollar and the Japanese yen versus the US dollar. Now, if you'll look closely at this blue line that you see, which is the dollar index line, you'll notice that I put in the ABCD pattern, and that should be fulfilling sometime today. And with these markets moving upward, in other words, the euro going higher, we should be hitting these levels around 9,400 in the dollar index. So that's going to be a key level to keep an eye on. That's also the 78% level on the dollar index. So that's another one that needs to be watched closely. So this is going to be a very interesting day, to say the least, and we'll see how these things are really going to be going. People have asked the correlations between these currencies and gold, and there is a correlation. But when people buy gold from in Japan, they price it in Japanese yen. When they buy it from in China, they price it in renminbi, and in Europe they do it at their currency of either the pound or the euro or something like that. So you've got to look at each one separately. Tom O'Brien on his show on Friday, I believe, talked about how the Dow Jones, when priced in euros, is not making a new high. So that's the main thing. What's really surprising to me, folks, is that we've got these treasury bonds rallying, in other words, lower rates, and the dollar going down. That doesn't make any sense at all, because when the dollar drops, you would think that people would sell treasury bonds to go to a higher yielding currency, but that's neither here nor there. So we'll see. But the long-term charts in silver and gold are beginning to look very, very healthy. Any move today, I don't think we're going to get above 1248 today, but should we clear 1248 in the gold, that's going to be an incredibly bullish sign, folks, because that means in just a matter of a few days, we've already taken out the 78% level, and that means that we most probably going higher. What to look for now is to watch for a 30-minute chart. Go to a 30-minute chart. You could use 15-minute if you want to, but go to a 30-minute chart and watch for your first ABCD correction that you get on that. That's just like we did in the wheat. Do the same type of thing, because Gartley said, the best thing you can do is when you're in a market that you want to enter, you want to buy the first ABCD correction in a bull market and sell the first ABCD correction in a bear market, and that's what you're trying to do. And since we're on that subject, we'll take a quick look here at one of the things that we're watching for today, something that we don't trade very often, but we've watched it unfold over a long period of time, and that is the cattle market. And we'll put this up so you can take a look at it here. You'll notice that on Friday we hit the almost the exact 382, so there should be a lot of resistance here at this 119 level in the cattle. That's the 382 level of what we're watching here. Now, if it gets above that, of course, then this pattern I would consider that being wrong. And this is what you're doing, is you're trying to reduce your risk on the trade to as small as number as possible. And that's what you're seeing here, because if you sell it at 119 in the cattle, which would take out the highs of Friday, then you shouldn't get any higher than that. That was the highs that we made back in July or June, on June 26. So if we take that out by just a little bit, your risk on this would only be about a penny. So your stop would have to be at 120. So you're risking about $440, to trade a contract of cattle that is worth, well over 50,000. So it's interesting to keep an eye on that. I do too, Duffy. They're my all-time. I only meet 3 times a day. I've narrowed it down to that. Okay, let's move on to some of these currencies because, like I mentioned here, we've had a pretty big move here in the dollar index these last few days, but we are coming down. This is the long-term chart now on the dollar index. And if we take a look at this, you're going to see that we're down in this area here of this 94.50 level, which should be there right now. We should be trading. I'm not sure where the dollar index is right now because I'm not able to pull up prices as I'm on the air. But if someone will give me the last of the U.S. dollar index, I would certainly like to see if it is around the 94 level, as I recall. Anyway, 94.50 level. We'll see if the dollar index is anywhere near there. Okay, we got another commercial coming up here pretty soon. 94.36, that's spot on, so that's right in the ballpark. And so we'll watch it very, very closely here to see if it's going to turn. Now, this is just a bunch of patterns coming together. That's all it is, but they're worth looking at. So this is why we're looking at them today. So keep a close eye on that. We'll come back. We're going to talk a little bit more, about the stock market things, and then we'll be right back after these few words from our sponsor.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to take a look here at this 30-year Treasury bond that we've been talking about for the last few days. If you go back to the 9th of July when we made the bottom down there at the 151.20 level, you see the market had rallied two handles. It backed off exactly to a 78% level at this 151.30 level. We ran up, made a new high, pulled back again, if you'll notice, exactly to the 78% level at 152.07. And now what we're doing is we are completing a third drive to a top. We've already taken out the other two tops. So we'll be looking at this area of around 153.27 is the exact number that we'll be watching. That'll also be a 382 on the daily chart. So we want to watch that. That will also be an A, B, C, D structure from June 13th through June 15th. And so there's going to be a lot of things there. And then if you look above that line, right above where it says 382 on the daily, you'll see the 154.04 level, and right above that is the 154.09. Now, depend upon what your threshold for risk is. The most you'd want to risk on this is what the harmonic number is in the bonds, and that's 20 ticks. So that would be a $600 risk. But this has a huge potential to it. The way I would handle this is much like what we were looking at in the gold. Is you don't have to be a hero and just go up there and sell it at 153.28. Maybe that's the high and it backs off really quickly. But frankly, what I think will happen most of the time is it'll pop through there a little bit and do a little backing and filling before it does start to turn down, if in fact it does. But this is flat out a valid pattern, folks, and it's taken a good 11 days to fill up. So this is the kind you like to see, and we've been expecting this, and it's acting perfectly. So if you're willing to buy it down there when it's 152 and change, you certainly want to be looking, to possibly take your profits or get out or get ready to go short up here, because this is a bear market on a longer term basis. We've seen this on the daily very easily, as I posted this morning, that this is a 38% retracement, and it has taken 11 days to get to this level here. We've got the alerts are going off. Well, we've got a move down in the NASDAQ, probably due to the bill of whatever the bill is. I don't know if that healthcare bill means anything or not, folks. I really don't. It's just a question of whether it's going to mean anything to some of these other markets or not. I don't believe it. It could be disappointment type of thing, but I'm not too sure of that. By the way, when we're looking at soybeans, we just this morning when we just opened in the beans at this 10.15 level, we've had a pretty good rally. The ABCD structure on this measures to 10.17, so that's very, very close, and that's a 50% retracement of the move down that we had going on. So just keep an eye on it, that could be a really good spot here for some type of a small correction here in the beans. I think the beans and the wheat have turned, and I believe they've got a really good chance to see if they're going to to move higher from here. The weather market has pretty much been broken, but the weather is going to turn bad again possibly. And remember that the soybeans, they have their pollination period is the first 2 or 3 weeks in August. That's when the bean crop is made, is when these pods are coming in. And so to watch that closely, because that is something that will be very interesting, to look at. So we've got this gold trading here at around 1239.90, 1240. If we get below, if we hit 1238 again, basically, folks, I will view that as a scratch trade, and I'm only doing that to keep my risks as absolutely as small as possible. And that's the main thing. Okay, let's get on and talk to a little bit about the stock market here. And just to take a look at some of these things that we've been watching over a period of time, we've got the Dow is up Dow's up. Well, no, the Dow's down 69 today. The composite's down 18. Gold's up 670, and the S&P is down 8. They're due for a correction, if nothing else. But the main thing is the fact that when we look at these patterns here, this was the New York Stock Exchange Index as of yesterday. You'll notice that we did complete a three drive to a top pattern here in the New York Stock Exchange Index. We did the same thing in the SPY, which was very, very important, and we'll bring this up so you can take a quick look at it also, because these patterns are completing, and with that VIX chart, that's such an incredible chart, that monthly chart, that and it goes along with with the way it should be, because the overall VIX index went and made a new lows, all-time lows, and didn't stay there for one day. And in a down day, the market, the thing popped up. So I'll watch it very closely. Yes, watch the S&P at this 2450 level. It's a little bit of a correction, but not too much. But we'll see what else is going to happen here. Okay, the question that someone's asking is in the gold. All right, let's just walk through this. They asked the question was the first ABCD correction. I think, I don't know where D has completed yet because it hasn't started. All I'm looking at is if this is a false breakout in the gold, and I'm not sure that it is because it's acting pretty nicely, but I don't want to risk any more than zero on this. Mainly I did this trade as for educational purposes for all of us, and frankly the stop should be at around 1232, but I don't want to take that $600 risk, so I'm just going to put my stop at 1238. What I will start watching now, with the high being 1242 and change, I will start watching for an ABCD structure using a 15-minute, or preferably 15-minute is a good one to look at, and watch for an ABCD. In other words, the A will be up around the 1243 level, and let's say it breaks down to 1237 and then rallies back up a little bit. I don't know what the structure will be, but start looking for that thunderbolt pattern. And when you see that, that'll be your place where you can put in your buy order, and then you don't have to risk, say more than about $500, which is $500 on a contract that trades for 100,000. 120,000 is not very much. So that's the way I would be looking at it. But the question that Bob is asking about Christmas corn, that stopped at the 78% retracement level several times. Let's just a second, I can pull this up very, very quickly here so we can look at it. And we've had a really good rally from this level, as you well know. This was as where we were on Friday, and we stopped right at the 61% retracement of the whole move within a half a penny, and now we've rallied up well over 12 cents already. And so this market is still, this big down move was a disappointment from the crop report. That's all that was. And and it showed that on Friday, the fact that it held major support in wheat, and the beans were the ones that didn't hold the support that I wanted. I wanted them to hold the 1002 level, and we got down to 1087, so that went a little lower. So we'll take a little break here, pay a few bills, and we'll be right back. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we're going to take a look here at this November soybean chart. I wanted to explain, the fact that we had a high of 1045 and we broke down to the 980 level. That's over 60 cents a bushel, and I would have assumed that it was not going to break more than 36 cents, which is the harmonic number in beans, so it went a great deal lower. But what we're looking at now is that ABCD structure up here at this 1017. Well, the show's not going to last long enough to see how this reacts today, but we'll catch up with this tomorrow to see if this resistance on this ABCD pattern in beans means anything at 1017. We're seeing a little bit of the same thing in wheat because we've rallied 15, 16 cents, and the harmonic number in wheat is 17 cents, so we might be looking at a particularly strong rally high today in both beans and in the, but remember, we're starting to see this influence of the weather market again. So, boy, believe me, these things can really move rapidly as we've seen in the past. We will have Norm Winsky as our guest on the 20th, and of course, tomorrow is my sister's birthday, my sainted little sister. So be sure to send some nice presents to her in Terre Haute, Indiana. She's as close to Mother Teresa as you're ever going to find anybody, folks. All right, let's take a quick look here at we'll pull this up to take a look at this Japanese yen. This is an hourly chart over the last 10 days in the yen, and as you can see, we have an ABCD structure coming in here. We did make a trade or two below the 111 111.99 level. We get down to 111.84, I believe. That could be a pretty good bottom here where we might get a rally of maybe 100 pips in the Japanese yen, but it's still, very, very early to see if that's going to happen or not. But this is a completed pattern here, and as you can see, this is still a bull market. But remember that number that we hit up there at the top was an ABCD of a Gartley pattern. So as we've seen in the past, these things can grab hold. So they can grab hold. No, she's actually 4 years younger than me. She is a real really nice lady. Anyway, she was a nurse, and that's what she did for a living, and she still does that. She, believe it or not, she goes to the nursing homes and she takes care of these folks that are in their 90s, and it's just amazing how she does. And my mom did the same thing. Let's get on to stuff that means something. Well, that means something to me. Let's take a quick look at here. We had a quick question about Twitter, Mr. The president's favorite stock. I don't know if it is or not, but we'll take a look here at Twitter. As you can see, we've had a pretty good rally. We had a nice butterfly bottom down there at around $14, and from there we've rallied all the way up. We're hitting 20 now, so it's had a pretty good rally. We're still in a bear market here, but as you can see, the patterns here have been really, really strong. You'll notice that the high was a perfect ABCD pattern from June through September. Came within about 20 cents of a $25 stock. That's about as close as you're going to get. And now it looks like we could be looking at this $21 a share level in Twitter, which should be some pretty strong resistance for this stock, because it's in a downtrend, and we'll see what's happening. Netflix, I don't know where it's trading, folks, but I always watch the numbers of these stocks just to see how crazy they are. And Netflix, the 1.618 expansion on Netflix was 179, and we did see that trade overnight last night, because my alert went off to tell me that Netflix had hit 179. I have no idea where it's trading right now, but 179 should have been something pretty strong, because that's a $17 gap. And as we've seen in history, Netflix has a tremendous affinity for filling gaps. So we'll see, what happens here. By the way, we still have a gap, two gaps in the Dow Jones and Industrial Average that is trading. One's around 20,600 and another one at 20,200. So I expect those to be filled this fall, if not sooner. But anyway, we'll be watching these as we go through. But 179, if you did the work on the Netflix, you'll notice that 1.618 yeah, there you go, 1790. I knew it hit something there. Thanks, Steve. That's good. Steve Rhodes just posted in the high was at 179. Oh, that's the gap. The Dow. Yeah. Wow, that's a big gap. You're right. That is the really big one. Yes, that's the really big one. I thought you were saying 179.86 in the Netflix, but I just hit 179, 2 or 3 cents as I recall. Okay, let's move on to the next one here to see what's happening, and we'll look at. See, I covered that. I covered the crude oil. I think I've covered everything, haven't I? Just about. Let me see here. Oh, that's correct. I have. All right, let's move on to get this last one coming in here. And this is what we were watching here in the oil. Just give me 1 second here to put this up here. Oh, hold on 1 second. I can't get that one up, folks. Let's get this one up here, a different one here, and we'll see where we are. I wanted to do the 2009 thing again, to go through that, because that was the big bottom of all bottoms in the stock market, and this was all related to, certainly this was such a huge astrological bottom here, being at the Bradley, but the planetary formations that were there were all lined up in two houses. I mean, we hadn't seen anything like that since harmonic convergence way back in 1987, and that's why this particular formation was, it appears to be so bullish. And also the fact that on that low of March the 5th, and then it retested it again on the 9th, that it was exactly a 61% retracement on the Dow at 64.64, and on the S&P at 666. So it was, spot on, all the numbers and everything coming together, and it was a 61% retracement from the 1987 low. And so that, figured into, this big rally that we've had all along. And whether it's going to continue or not, I am not sure. All I know is that we're in a situation where we've got a lot of astro stuff coming into this July period, and we've posted this several times from our good friend Bill Meridian. And you'll notice that in years that end in 7, they seem to top sometime in mid-July, and guess where we are? We're mid-July, so we'll watch this closely as we'll see here. All righty. Now, one other question someone asked me, I don't know if I can answer it or not, and that is Elliott Wave. Folks, I've looked at Elliott Wave since 1970 when John Hill introduced me to it. I had a hard time differentiating between 2s and 4s and 3s and 5s. I never could get it right, but I found out that I could use these patterns that, I've given them names like Gartleys and 3 drives and butterflies. Those I can understand. They make it very easy, but try to understand some of these subwaves. It's just, it's difficult. Every time I've been with two Elliott guys, I always get 6 different answers because each of them have 3 alternatives, which is okay. It's okay to have alternative ones, but with the patterns that we're looking at, we're just looking at something that's either going to happen right now or it's not. We're seeing it in the bonds, we're seeing it in the yen, we're seeing it a lot of different things today. So let's take a break here, and we'll be right back for more words of wisdom from our sponsors.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've posted the, excuse me one second. I posted the chart of the XRB, which is the gasoline futures, and I want you to notice that these, one second, they've already broken out to the upside. I'm expecting that to happen in crude oil too, but there, don't let your expectations get, too riled up. But we need to get crude oil above the $47.10 a barrel level. If we get that, then that'll be a breakout in the crude oil, and we'd be looking at prices to extend up to about the $49 a barrel level. Now, regarding this gold, I'm doing this experiment here. The actual sell in the gold should be at 1232. That's where the sell should be. Sell stop, so you'd be risking $6. I do not want to risk $600, so I want to risk zero. So I'm going to put the stop at 1238, which is my break-even point. If it gets there, I feel I'll be happy because I didn't lose, and I'll be not sad because I don't know what I would have made anyway. So I just want to keep my losses nearly as small as I can. So we'll watch it very carefully. Remember, the ABCD structure is what you want to watch in that gold market if you're going to be trying to be a buyer. If it gives you a chance in there, that's what you want to be looking. It's already told us that it has some power here because we cleared the 61% retracement in gold. We cleared the 61% retracement in silver and cleared them cleanly. I mean, we took them out cleanly. So that tells us that the situation in the gold and silver might be turning. And I believe the reason for this is the fact, if you look at this really long-term chart here, this daily chart going back, over the last 7 or 8 months, you'll notice that we made new lows from December, but we made it with a perfect ABCD structure from April through May, up into June, and then down into July the 9th. So, and now we've exceeded 1620. So this is a really good sign. We rallied $1 an ounce in a matter of a week. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.